Hey everybody, Smart Silver Stacker here. Hope you're doing well. So a bit of a correction across the precious metals today following comments made by President Trump. So we're going to do a technical update on the chart of both metals, and I just added to my physical silver position. We'll get into why as we go through our analysis today. If you want to take advantage of the dip in silver and get your hands on some physical right now, SD Bullion has got 90% US silver half-dollar coins available at spot. Doesn't get much better than that if you ask me, so check them out with the link down in the description. Now let's start off with the chart of silver here. So you can see what's been happening in silver is we get a run up like this run up a couple weeks ago to over $39 for the first time in 14 years. Then we had a bit of a consolidation. Now the low from the consolidation was put in here on Wednesday, July 16th. And then we had a run up all the way to new intraday record highs for the past 14 years here on Wednesday, July 23rd. And what I've drawn on the chart here is a Fibonacci retracement between those 2 points. And if you look at what is happening today, we got this sharp sell-off following those comments from President Trump. We'll get into that in just a second. And then what we saw was a pretty solid bounce here. This is an hourly chart, so you can see we got a nice bounce right off the 37.96 level. That is a 23.6% Fibonacci retracement. And these three green candles here following that bounce suggest to me that we may have found a bottom here. And it's not unusual that we would get some profit taking as silver approaches the $40 level. On Wednesday, we got within about 50 cents of that $40 level. That's an important psychological level. And we may see that price level get rejected a few times before silver is able to actually breach that. But once it does, that resistance is going to turn support, and we're going to see a significant rally from that point. That's just my analysis of what is coming in the silver market. Now on this 1 hour chart, you can also see that as silver was touching down to that $38 level or so, the RSI on the 1 hour chart got pretty significantly oversold. So again, that's suggesting that we may have bottomed here. And if we take a look at the chart of gold, there's some interesting action there as well. This is a daily chart of gold, and you can see that gold has been consolidating within this pennant formation. We had a false breakout on Wednesday, July 23rd. So just a couple days ago, we had the gold price rise above, actually it rose above on Tuesday, and then it came back down on Wednesday. So false breakout there. Today, it looks like we may have gotten a false breakdown as the gold price dipped below the lower trend line of this consolidation, but since then has bounced and risen back in. So I think that what we're looking at here is just a tight coiling of the gold price. And once we get a breakout to the upside of this pennant formation, we're going to see new all-time highs in gold. So that's my forecast for gold. Let's delve into why. So the news that seemed to precipitate this correction in the precious metals was President saying that there's a 50-50 chance of a trade deal being reached with the European Union before his self-imposed August 1st deadline for these reciprocal tariffs. He said that we're working very diligently with Europe, the EU, and this is as he was leaving the US to head to Scotland, where he's going to be doing some golfing at his golf resorts, but also having bilateral trade negotiations between the US and the EU. Markets seem to interpret this as a positive sign that a trade deal is right around the corner, and so the idea is that now there's a risk off, so the safe haven assets such as gold and to a lesser extent silver are declining. But that's an interesting dynamic when you think about it when it comes to silver, because you might recall that there was this big decline in the silver price following the announcement of reciprocal tariffs on April 2nd. Now, if that is in fact how you would expect silver, an industrial metal, to react to news of tariffs, then you would think that promising news in terms of reaching a trade deal with the EU would have the opposite effect on silver, but that's not what we're seeing. And so I think what's happening here is that gold is selling off because it has this safe haven appeal, which perhaps now if markets think there's less chance of deglobalization, less chance of higher tariffs, so they're selling off their gold, and silver is just kind of getting caught up in the mix. But another thing you notice if you zoom this out to that time is that there's still a strong uptrend in effect. You just need to look at the trend line here. And so that's why I view these pullbacks as buying opportunities in silver. That's why I accumulated more physical silver on the dip today. And there are other things that the president has said recently, which I think the market should be paying more attention to, but which seem to just kind of be flying under the radar. So we had the president meet the chairman of the Federal Reserve, Jerome Powell, yesterday at the Fed. And following that meeting, Trump has now stopped calling Powell a numbskull, an idiot, too late Powell. Now he says he's a very good man, which, I mean, this just shows you how mercurial the president can be and why any market action driven by his commentary should be viewed with a lot of skepticism. But here's this report from CNBC, which quotes the president as saying, "I think we had a very good meeting on interest rates, and Powell said to me very strongly, the country is doing well." I got that to mean that I think he's going to start recommending lower rates. Now, the consensus is still that at the next FOMC meeting, the Fed is going to leave rates where they are, but the likelihood of easier monetary policy seems to be accelerating, and it simply has to, right? Just look at the national debt, $37.148 trillion. This is the real reason that we need much lower interest rates. The president has told us he wants interest rates 3% lower, in the 1% range for the federal funds rate. And that's a hugely stimulative amount of rate cuts. And this whole squabble between Trump and Powell as to whether or not rates should be cut is going to be immaterial in the medium term here. Maybe not in the short term, but Powell has less than a year in his stint at the Fed left. And then there's going to be a replacement named by the president, and all signs point to a major dove being stuck into the Fed. So whether or not the president fires Powell and replaces him and gets his way soon, or whether it takes another 10 months to occur, we're going to see a trajectory at the Fed towards significantly lower rates. And that's why I view these dips that, like what we have today in silver, as just a buying opportunity. You know, only 2 times in history has silver risen to current price levels, and both times it went on to hit record all-time highs around $50. So the fact that we got up to $39.50, the price level was rejected, and now we've got this dip today to $38.22. I mean, how many people were looking at the silver price as it rose to the highest level in 14 years and thinking, ah, man, I missed the boat? Well, here's your chance to get some silver. And it's not financial advice, but if you were looking at that and thinking, I wish that I had accumulated more at lower prices, well, here are some lower prices. And that's why, I just dollar cost average when I see these dips. Now, for me, the problem is that the current prices are significantly above my dollar cost average. So now when I stack silver, I'm bringing up my average price. But that's okay, because at the end of the day, with the trend that fiat currency is on, I'm aware that if you're stacking for the long term, which should be the time frame for accumulating physical metals, it's not going to be about the dollar value of your metal, really. It's just going to be about how many ounces you have. So that's why I continue to accumulate. And from a short-term technical standpoint, even, I think the metals are looking pretty promising. So these pullbacks, under $39, under $40, they may not be around for long. Anyway, that's what I'm doing. So let me know what you think in the comments down below about this pullback. What do you think about tariffs? I mean, is that going to be an important factor for the metals moving forward? I think that what we should be looking at is the debts, the deficits, the dollar debasement, and the fact that the only thing that the administration and the central bankers seem to disagree on is just how fast the dollar should be debased. But anyway, thanks for watching, everybody. Stay safe and happy stacking. Don't forget to like, comment, and subscribe, and I will catch you next time. Smart Silver Stacker out.